the entire dynamics change, right? Once the finance minister opens that tan briefcase of his and starts reading out the budget document. For now, you really can't take a whole lot, from what the market mood is like. The currency has started off on a weak footing. The yields continue to hold up. So it's status quo really for the money markets. If not, they have worsened. And I mean, the Nifty opening at 70.50, just an uptick of 20 odd points, is by no means any indicator of what the market is going to be like. And the globe is a little jittery considering China is down about 3.5%. You've got the Shenzhen colliding by about 5.7%. So yeah, China continues to stick out like a sore thorn. But Raamdeo Agrawal as well is right here with us in the studios. Raamdeo, good morning. Just now we had the finance minister flag off his briefcase. He had a huge smile on his face. Does it seem like the body language seems to be like it's going to be I'm with the Bulls, or is it I'm with the Bears?
I mean, his hard work of last 2 months has come to an end, and this is now exam time. I think yesterday Prime Minister Saab also kind of termed it as his exam, and they're all set. And so I think today it will be very interesting to listen what kind of contours they have set in a very grim global environment, economic environment.
Absolutely. But Raamdeo, I just remember just last week when we were chatting, and Raamdeo was telling me before the show कि बेटी की शादी कैसे होती है, dividend tax, right? So what happens if LTCG or a dividend tax comes about? Is it, I mean, do we see a big shake-off in an otherwise, in any case, weak market?
See, बाजार में क्या होगा हमको नहीं मालूम. I mean, we don't know what is going to happen in the next 1 or 2 hours or 4 hours.
That's a big sentiment spoiler, not for one day, right?
It's already, if you are talking about it, it's there in the price.
Okay.
Don't worry about it.
A long-term capital gain tax is in the price?
I mean, I wouldn't know. First thing is, we don't know what is going to come because it's a complete package.
We're discussing probabilities.
Yeah.
So, at 7,000 on the Nifty, or closer to 24,000 on the Sensex, are markets pricing in all the bad news?
To some extent, yes. I mean, whatever you and me are discussing, they're all priced in. I mean, to the extent, but other things must also come. So,
what are those other things?
Other things like, say, some kind of corporate tax reduction, some phasing out of the subsidies, solid resolution of the banking problem. They have opened the can of worms. I mean, like, they recognized now in this quarter. So now it has to take the logical conclusion.
So what is, from a market standpoint, not from the Aam Aadmi standpoint, what will be a great budget, a good budget and a bad budget?
I mean, you have to look at it in totality, and the issue is it's just not about one provision here and there. The whole lot of, I mean, see, first thing is we are not speculating.
Of course.
Okay. If you're asking me what is going to happen overnight, so that's not the game. I mean, at least take a 1 year view. Say, if you look at the 2013 budget, 2014 budget or 2015 budget, we had a bumper 3,500 points move. Okay, I mean, March to March, if you see, it was more like 6,000, 6,500 going to 9,000. Then from 9,000, when we said it's a wonderful budget, good time, we have here 2,000 points down. So it's not only about budget only. See, as far as the stock market is concerned, you see the global backdrop. What is the price of the oil? Oil 2 years back was 110. Last year was 60. Now it is as low as 35. My sense is oil will be much higher next year. And that might pull the market. And we might be still barking at the budget tree. So there are a lot of global forces. What will be the behavior of FIs? They're in redemption mode. January saw the biggest redemption worldwide in the equity mutual funds. Obviously, we saw our share of selling. So these are issues also you have to tackle when you look at the stock market. And so there are multiple forces which are working right now. And I mean, today, if by chance FIs decide to sell big time, what they did till Friday, then even a wonderful budget might look not so wonderful. So there are a lot of forces, and shorter term, it becomes even more difficult.
Right. Nilesh, I'm going to come to you on this one, really. Like Raamdeo also said, that budget may be a one-off event. Sure enough, there is going to be some volatility, some more FIIs, and maybe DIIs also pulling out if there is a taxation change coming about. But come next day, and it's going to be back to the globe. What are the FIIs going to look out for from this budget? Is it only going to be the fiscal deficit number, or is it going to be something more meatier than that?
So I was in US beginning of this week. Met couple of clients over there. India is there on the radar of everyone.
That it
everyone
has been
tracking.
forever.
And it's
What
been there
more?
forever, but
Yeah.
everyone has been tracking. And the questions which came were quite minute in details.
Like,
They even asked like, what will be the strategy of political parties going into UP election? So clearly we are there on the radar, but right now we are facing the headwinds of GEM fund redemptions. I mean, there is so much of redemptions in emerging market funds that they are just not having allocation towards India. So unless until we see this global emerging market redemption slowing down, it's difficult for them to invest in India despite our fundamentals, despite our budget.
Compulsions and adjustments are at play, let's be frank. And the point you could ask yourself is that are foreigners really selling Indian stocks because they worry about long-term capital gains? The answer to that is no, because 65% of the global money which has come into India, that's actually coming via the treaty route. So we are nervous, Raamdeo. At least the street is nervous with the assumption that the taxation structure will be changed. And who's selling this market? Foreigners are selling the market, and 65% of the global money which is coming to India is coming via Mauritius and Singapore, and their life will not change for next 2 years.
So those projections would be far more sensitive to what happens in longer term in the market and shorter term.
The disconnect between the activity versus what the fear is.
Yeah.
I mean, if at all long term is making a comeback, it will change life for an average Indian. It will not change life for foreigners.
The worry there is, Nikunj, will the government always believe in Atithi Devo Bhava? Will FII always be given preference over domestic
Come on, are you saying
investors?
that GAR is going to come?
No. So what we need is a level playing field. Anyway, already 34% of India's listed market cap is owned by foreigners. If you remove the promoters out, only 10% is left with retail Indian investors. Now, let's not create a level playing field where this 34 becomes 51 and this 10 becomes 0. The whole point is, will we always give preference to foreign capital or will we focus on domestic capital? India is a net exporter of capital. In 10 years, we have imported $221 billion of gold, silver and diamond on a net basis. The FII flows in debt and equity market put together over last 10 years is just $190 billion. We want efforts in Jaipur and Ahmedabad and Rajkot rather than in just New York and Tokyo and London. We need foreign capital, but we also need domestic capital to be part of domestic growth story.
Right. Okay, just about 2.5 minutes left. But Raamdeo, I just want a quick 30-second response from you before we get in today's top ideas as well. Your view has been that there should be DDT should be done away with. If that doesn't happen, if there is some tinkering on STT and no tinkering on capital gains tax, would you be happy with the taxation developments for the capital markets? A quick 30-second answer, Raamdeo.
I don't think Raamdeo was able to, get your question. There is also a fear that the STT on derivatives could change. The STT on derivatives could go higher. Will that sap liquidity if that has to happen? I'm asking you difficult short-term questions, but that's the moot point. You'll appreciate my concern.
Yeah, I understand. I mean, if you discourage any activity, you make it, particularly derivatives and all, they're very sensitive to the cost of transaction. Investing is not that much sensitive to cost of transaction because, 5 bips here and there, but in derivatives it makes or breaks. So clearly it will have
so
huge
don't
impact.
do anything which will disturb the rhythm as it is. The back of the market is broken, Neeraj, and I think the messaging from the market panel, Neeraj, is that stick to basics and sometimes no news is actually good news.
You pretty much asked the question that I wanted to, added a couple of flavors as well. So very good, but 1 minute left. The top 2 ideas from our technical experts, actually, let's get them going. And Mitesh, if you had to nail it down to one stock ahead of the budget, what is it from your end?
I would choose a long trade on DHFL with a stop at 148 for targets close to about 159, 160.
Okay. CK, what would it be from your end?
I would choose a long in IGL at 518, stop 510, targeting 530.
Okay, Nikunj, market open.
Well, Neeraj, we all know the global backdrop. We know that today it's not about earnings, it's about sentiment, it's about emotion, it is about initial adjustment, and in some case it really could be freaky and non-freaky in nature. But frankly, there is a lot of nervousness, anxiety and chaos in the market. The market positioning is very weak, and a decent budget also in the short term is capable of lifting the market mood and changing the tide, at least in the short term. 7,000 seems to be the new normal for Indian markets, at least for the moment, because for the Nifty the first rates on the screen are 7,000 plus. 7,038 for the Nifty. For the Sensex, it's again a strong start. 100. Okay, there you go. Nifty is already losing now. Flat start for the Nifty, flat start for benchmark indices. And for the Bank Nifty and other key indices, I quickly want to just race our viewers through what's happening to the other indices. The Bank Nifty is absolutely flat. The CNX mid cap index for the moment is not going anywhere, and the IT index and the small cap index also just about tagging along. But Neeraj, I guess the heat map should be up by now, and all Nifty 50 components they would be there.
Yeah, well, let me just quickly, Nikhil, you summed it up right. I mean, the bottom levels say it all, but just look at the flavor on the screen. There is just so much of red compared to the green that we saw in the pre-open session. So the red is overtaking the green by a wide margin. The heat map will come up on your screen moments from now. There you can see. Top 4 or bottom 5 rows have all red on them. Hardly any green on the screen. There's a bit of flavor that we have in Ultratech Cement, and we all know the reasons thereof. Vedanta, I don't know whether it's got to do with that gold mine or something else. And a couple of PSU banks. SBI is, of course, the top gainer right now as we speak. So that is doing okay. There are a couple of other PSU banks like PNB, etc. But the red is far higher. IT at the bottom of the heap, Wipro, HCL Tech, both of them down. There is weakness in ITC ahead of the budget. Remember that whole talk of how if any, there might be some tinkering again with the excise. Is it in the price? I don't know. But it's showing some bit of nervousness right now. And there is some bit of weakness in cement names by and large. So leave aside Ultratech. The others have a bit of a red. So the movement says it all, guys. There's a lot of red on the screen, and try as it may, the Nifty is not trying to move too much. I mean, just about 0.25%. So really, a dull start in favor of the gainers right now, but I would reckon that until the next hour and a half, you'll probably have rates similar to this. Don't see too much of gyrations, frankly.
Yeah, at least not on the index, definitely, Neeraj. We're going to see a very quietish move. Having said that, just look at the housing finance companies and the kind of, activity perk up that we saw in the last week. LIC Housing Finance was a big winner in Friday's session as well, and that trend continues today too. Is one of the top movers within the F&O basket. Bajaj Auto, one of the underperformers of last week, that has come back, and that's indeed a price gainer within the F&O market right now. Vedanta, Neeraj, like you rightly mentioned, is also one of the movers. ONGC is holding strong and good 0.7%. Again, this seems like a budget-related trade. And IRB infrastructure as well, given the kind of thrust that the government may actually have in this budget with regards to infrastructure. Maybe that's why you're seeing some bit of traction come in IRB. What's not looking good then? The Bank Nifty, although quiet, but the bias is a bit towards negative. ITC, no prizes for getting this one. A syntax expectation. ITC is the typical one to get the brunt of the government clampdown on tobacco and related products. HCL Technology is down by about 0.4%. And these are the futures prices that I'm reading for you. Tata Communications, that's the biggest price loser. And Eicher Motors also part of that list, which is down by about almost 0.5%. But yeah, IRB, look out for that one. That seems like it's going to perk up quite a fair bit already at 216 on IRB futures.
You know, one of the easy areas actually is the entire HFC space. That's one space where earnings are still strong. That's one space we know that the multiplier effect really will be created. So Raamdeo, increase the tax benefits to the housing sector. Do you think that's more like a plumpic, a very doable thing? Housing as a sector could have a multiplier effect on the economy, on the cement sector, on the steel sector. The focus on smart city is already committed. It's already there. Smart cities are being rolled out. So do you think it's a given that nothing is given in the world, but do you think it's a plumpic?
Yeah, I think the direction of what is needed in housing finance is clear, in the sense that even last 2-3 budget it was more favorable. And it is expected that at least from the private side, if you want to encourage capex, this is one sector where you can still see a lot more momentum if you give the breaks in the taxation or whatever is the suggestion, and interest rate subvention for the low-cost housing. And in any case, there is a government appeal for housing for all by 2020 or 22, which is a huge move. So clearly we are going to see some initiative in this direction. And good thing is that we have a very well regulated housing finance sector, and the sector is expected to grow upwards of 20% for many years to come. I mean, it has been growing for the last 25 years at 20-22%. And so there is one place where even in this kind of environment, you have high double-digit growth available. And stocks are reasonably priced in this sector.
Good budget, bad budget, poor budget, dream budget.
Yeah.
Let's forget about it
Yeah,
for a minute.
yeah.
In next 1 year, do you think money will be made? Do you think in next 1 year markets will be higher? And do you think in next 1 year, lot of a lot of bad things which have happened to the world, they will stem up?
Yeah, so as far as the market is concerned, I remain positive on a 1 year basis with a lot of turbulence on the shorter term. But if you ask me, by the time of next budget, we should be higher, significantly higher. Significantly
so
higher.
10% on the index in next 12 to 18 months.
It should not be a problem. That should be bare minimum expectation.
Okay.
Okay, so that's the index part of it. But if you look at the global thing, I think one of the main thing will be the oil. And after hitting 25 or 24, we are already seeing there is a traction, there is a withdrawal of excess production by Saudi Arabia and their own friends. So my sense is that oil will determine a lot of direction in the second half of the year.
Well, what a day he's chosen, right, to come up with his budget. Actually, not his mistake. I should say, what a day Oscars have chosen, clashing with the budget. And that's the Economic Times. Arun Jaitley holding up the Oscar trophy right now. And Nilesh, that's exactly the question that I'm going to ask you. How many Oscars will the FM win today?
Oh, he has a choice of winning plenty of Oscars.
But will he or won't he?
I'm sure he will. Because today when I compare myself vis-a-vis other countries, we are in a sweet spot.
If he gets the Oscar for Mr. Popular, that's bad news for markets, isn't it? That means more focus towards rural economy, more focus towards middle class.
He needs to win the critics category.
Exactly, which is the markets category.
As long as the budget is pro-poor, there's no problem. But let's not make it anti-rich.
Okay.
You can't make all the poor people rich by making all the rich people poor.
Oh, yeah.
So there is a reasonable opportunity for us. While we are falling with others, we are falling with a parachute of $70 billion saving in oil import bill. I mean, that solves a lot of our problem. We are all worried about banking sector NPA. I mean, all the NPAs accumulated for last so many years is just equivalent to our 1 year of oil saving.
One word
and
answer.
import bill.
Raamdeo is bullish. Are you bullish? Do you think in next 1 year we will be higher?
Yes.
Okay. Aisha, before we thank both Raamdeo and Nilesh, I have one tagline. Never ask Babar if you need a haircut, they'll always say yes. Never ask fund manager on the market, they'll always be bullish.
That's
More than
good
that,
one.
we are investors. Before fund manager, we are investors. We want the market to be up.
But will I get a reservation on that basis?
Okay, thank you both for taking the time out and speaking with us today. We will chat with you again later in the day. But hear it out, the network exclusive, Jayant Sinha in an exclusive chat with Arnab Goswami. Let's hear out and whether or not we can read into anything about what the budget document actually entails this time.
And joining us now is Jayant Sinha, Minister of State for Finance.